Hey, what's going on, folks? This is Jason. Welcome back to the channel. Sorry, I was a little bit late, having a little bit of an equipment issue today. So happy to answer any questions you guys might have today. Love to talk about what's going on in the markets. We can talk about individual stocks today. We can talk about just about anything you want to, but those questions need to be fired off. I did want to address the question from one of my good buddies here, at least good buddy online. We've never met in person, of course. Shoeless Joe from all the way across in the UK. Hey, Jason, what have you bought during October so far? I'm curious to know how you allocate during these dips. So I haven't actually. So I was in the process of doing some business outside of the internet and outside of YouTube and that sort of thing. So one of the major things I bought this October was actually the other half of a business that I own, and one of a couple that I own, and the only major stock purchase that I made this October due to a lack of funds really was a hundred shares of Nvidia. So, and I did that via a cash secured put, meaning that I knew that I had a certain amount of cash available. There was a price, and that price was $125 that I was perfectly willing to pay for Nvidia. And in fact, it just fired off on last Friday. So I'm a proud owner of 100 shares of Nvidia, which are now about what, $6.5, $7 underwater. Let me see, where did they end up today? So it ended up at 118.88. So I am a little bit under, a little bit more than $6 underwater per share on those at this point. But perfectly confident that within a month or two, I'm going to be well above that. Those shares are, of course, not for something I'm going to turn around and sell right away. Those are long-term. It's a long-term portfolio. So Yazan says, Neo, what's going to happen with Neo? So Yazan, nothing has really changed about Neo in terms of. So I do believe that they made a couple of strategic miscalculations in terms of their expansion into Europe. Now, to be honest with you, this is perfectly expected to a degree. This is a different culture for them. And Chinese companies as a whole have not, companies this large that are expected to offer service with their product along with just a product as well. The Chinese companies don't have a lot of experience outside of their market doing this, right? They sell a lot of things outside of China. It's just not something as large and complicated and that has so many service demands like a car does. And it's not a new product that people aren't familiar with, meaning this is an electric vehicle that's going to need either battery swapping or or supercharging stations for it. And so there's bound to be a few hiccups. So, but that I don't believe has actually anything to do with stock price. I think stock price right now is completely related to macro environment. Now, Neo is an Xpeng. Today I looked at Xpeng. I think Xpeng was around $8 a share. I'm actually absolutely stunned by Xpeng's drop, but it's not unjustified based on the current cash flows of the company. Remember, when we buy a growth stock like this, you are almost always paying too much money for it based on its current cash flow. What you're looking at is its earnings growth rate and whether or not that earnings growth is going to eventually justify the price that you paid today, right? So for anyone, this is the reason I hesitated to use the words undervalued or overvalued when it comes to Neo, even Tesla, when it comes to Xpeng, that based on current cash flows, every single one of these companies is actually overvalued. You're buying it for its future success. Right now, it's being priced for its current cash flows, and that's really what's going on. So if they demonstrate continued earnings growth, we will see the stock price turn around. But it's just like with Tesla back in the day, Neo and Xpeng and Li are experiencing very uneven cash flows. And they have the additional challenge of having lots of competitors, which is something that Tesla didn't have. But they have the advantage of a market that has insatiable demand. And at no point prior to probably 2020 did Tesla actually have inexhaustible demand for their product, meaning that they could have produced as many as they wanted and been able to sell all of them. So My advice to you when it comes to NIO and XPeng is don't make any hasty decisions. I am way underwater on my XPeng stock. I managed to get out of Neo, but I didn't. I really did that as a risk reduction strategy, not because I have anything in particular against Neo. I do think that XPeng might end up being a better company simply because they have a better handle on their manufacturing process. But yeah, so it definitely looks possible that Warren Buffett is selling BYD, and a large part of that is a system of registering shares on the Hong Kong exchange that you have to do when there's going to be like a large sale or something like that, and pretty much the exact stake that Warren Buffett and company has in BYD was registered, but it makes sense to a degree for Warren to do that, meaning so they invest for the long term. They've owned this company since 2008. They really bought the company for its battery business and not for its automobile manufacturing business. They're really for its battery business. There are a few things that may make them think that the battery business has reached full valuation. So, and because the procedure for selling is a little bit different in Hong Kong than it is here, um, that I'm not exactly sure why they would have registered the entire stake, but if you look at BYD in terms of its current cash flows versus its price now, it definitely looks overvalued as well. Even though this is a company that's been profitable for quite some time, but there are a few warning signs for BYD. They have actually had a little bit of trouble securing the lithium that they're going to need to expand to meet all of the demand that's out there right now. And if they're not able to secure all the lithium that they need, then some of that business that they're looking to do is actually going to go to their competitors. And the battery business, probably originally that the battery business that Warren Buffett and Charlie Munger were looking at, they were looking at BYD being a supplier to a wider market. When now it looks like BYD's own automobile manufacturing is probably going to take up the vast majority of what they make in terms of batteries. I mean, I would be. I know that they are selling batteries to Tesla at this point. They're, and I don't know what kind of numbers they are. It's always been that I thought, at least since the Blade battery was announced, I think it was announced back in 2019. They really had the working models out by 2020. I knew that that was always a big deal that they were going to be supplying that outside of Tesla. What is the volume in which they can do that? So that is the real issue there. Do they have the supplies necessary to meet those demands? But yeah, so those are questions that I have about BYD. Is my question with them is, do they have the raw materials? And that's I think that's the question that's going to dog a lot of battery production companies in the next couple of years. So a lot of these smaller companies, man, unless they have a really special technology, and I even think that there's a lot of really good technologies that are going to end up dying on the vine because these are great companies, but they can't scale. They can't get the necessary raw materials. The company is going to end up being sold for pennies on the dollar. And because there's so much sunken cost in what these larger companies are doing, that even if they go and they snap up these smaller battery firms, there's so much sunken cost in what they're doing that if the change in battery performance is incremental, then it's not going to get done. If the change is even really a lot, it's maybe not going to get done because of that sunken cost. And we may actually see a lot of technologies that could help on the interim get bypassed because BYD is already making 30 million units a year of the Blade battery. They're already making a ton of profit on it. They buy a company that gives them a 9% advantage or something like that there with the battery technology. They end up not using it and then sitting on the patent until it expires or becomes passed up by other technologies just because they've already got so much invested in producing the Blade battery. That's going to happen a lot. And it's because the battery market has just become too hot. There's too much demand. And we are going to see destructive, or not, we're going to see competition weeding out some actually really good players. They just have ideas that are not going to get attention. We're looking at CATL, LG, probably Samsung, BYD, a couple of other players that are out there. Not Samsung. I'm thinking of SK Innovations, and a couple of other companies out there that are, and Tesla, of course, that are going to dominate power storage in the next couple of years. And I'm going to be not surprised at all to see a lot of the smaller companies we're investing in right now, they're going to get snapped up for nothing. So, let me a second here. My mouse just died. Karsten Knobloch says, regarding meeting lithium needs in the U.S. and North America, seems like there's a decaded demand with no matching supply. Any thoughts? So the issue is not the actual existence of lithium. That's not a problem. It's not rare. It's the 26th most abundant element on the planet, and it's also found in wide, in over a wide geographic area. It's just the easily accessible supplies and the amount of infrastructure needed to get to it. When we say we were looking at buying lithium mines right now, we're looking at buying lithium mines that are already in existence, and there's already all the equipment there, all of the processing stuff is on site, all that. So, just for example, we have massive deposits under the Salton Sea out here in Southern California, but there's no actual exploitation of that resource going on right now because it takes 8 to 10 years to get all those permits finished. There's a massive investment in all of that infrastructure and drilling equipment, all of that stuff. So I think that it's going to be a really, really long time before we start to see a serious amount of expansion of lithium mines here in the U.S. And that has more to do with permitting and the pace of investment than it has to do with actual existing lithium supply. We're going to be looking at existing operations in Australia, in Chile, and in China being exploited first. I remember there was this meme going around about Afghanistan containing tons of like lithium reserves, and that's one of the reasons this and that. And somehow the Bidens were connected to that. And I just laughed at it, and I was like, I don't know how stupid people can be, but it's really, really stupid. The resources that would be needed, the political instability that exists there, there's going to be, even if there's tons of lithium there, it's not coming out of the ground. It's not. And a lot of it has to do with you can't trust anyone to invest in over there. So that's one of the big challenges. But the other thing was the assumption in that meme that was created that lithium was something rare. It's not rare at all. It exists actually in abundance in seawater, and we have the ability to filter for it. And with some of our water and power issues, like I would not be surprised to see one day that we have combination desalination and lithium mining plants here in Southern California, as it just makes sense where we live here. So, yeah. Let me see here. Was disappointed that President Xi doubled down on the zero COVID policy. Can't blame him because China wouldn't be able to cope. So I agree and I disagree. I agree that I'm disappointed that President Xi doubled down on the zero COVID policy. At this point now, I would say that China probably would be able to cope because, like the rest of the world, even countries like Australia that had really bad COVID restrictions. I mean, much worse than anywhere in the United States, at least based on the people that I've spoken to. I didn't go to Australia myself. I think that the estimate now is that up to 90% of the population of Australia has partial immunity to any new COVID strain that comes out, as well as in the United States. We've all been exposed at this point. And I think that zero COVID policy no longer makes any sense for the economy. I think that you're going to have more excess death due to economic disruption than you would from COVID policy at this point. That certainly wasn't the case in the very beginning. And I think that he did what he needed to do to save lives in China because their medical system would not have been able to cope with the even 0.5% mortality rate that we had here in the United States. They would not be able to, in the early days at least, they would not be able to cope with that. They simply just didn't have enough medical staff on the ground to do that. So, yeah, no one's comparing COVID to, at least no one who understands the basics of statistics is comparing COVID to the common cold or the flu anymore. I certainly was in the beginning and didn't take it very seriously. until the numbers started coming out. And yeah, and the amount of conspiracy theories that started coming out almost immediately, like that. Conspiracy theories are just about my least favorite thing on the planet, largely because there's only about 1% truth to any conspiracy. But the medical conspiracies are my least favorite because that would involve managing thousands upon thousands of people in a conspiracy and to have them all go in the same direction and no one actually dissent from that and go in a different direction. It's never going to, if you've ever managed more than 20 dumb people in one group, you'd realize that conspiracies just aren't really possible. You can't point that many idiots in one direction at a time. So that's kind of that's kind of my thing on there. So I'm gonna get rid of that. So I'm gonna stop doing that. This is not a COVID channel or a conspiracy channel. Trying to think about how I can protect myself in a recession. I'm saving but investing monthly into ETFs and indexes. Actually, you're probably doing exactly what you need to do. And when it comes to recession, remember that recession, what the markets do are often two very different things, and that the market is a leading indicator. I would say that there's a very good chance that we are well more than halfway past the point of pain. So the point of pain really began in November of last year, is when we started to see a decline in the NASDAQ. It didn't really start in the S&P 500 until about the end of January, but at least in terms of a I'm sorry, at least in terms of a recession here for the, in terms of investing, it looks like we're well past the halfway point. A couple of things going on right now that make me think that, and I don't have the firm data that I would really like to have, but I stated in the last live stream that I think about 3,600 is the bottom here. We're above that. I think it was about 3,660 for the S&P 500 when I made that statement. We're at 3,677 today. I do think that we're going to, bounce around between 4,000 and 3,600 for the next couple of months before we catch fire again. But the Dow Jones is today again over 30,000. The NASDAQ had a huge day today. Don't pay too much attention to the day-to-day movements in the market. You want to look at overall trends and overall directions. We just had a really horrible month and a half. And the turnarounds to the market usually happen around that horrible month and a half. Now, when we look at the average loss for a bear market, right, it usually gets to a point where the market is down somewhere between 30 and 40%. We haven't actually hit that at this point. And we may not hit that at this point. And some of that has to do with inflation. Some of that has to do with investor expectations. Some of that also has to do with how high interest rates are now compared to how high they were raised in past events and how much excess liquidity is going to be in the market. I do not expect this one to be as sharp as some of the large downturns we've had before, but it's already lasted to a degree a little bit longer than average. So I do think that we are past that point. So yeah, but what I think what you're doing is fine, which is saving money and investing. When it comes to savings, I have a huge issue with savings right now. I don't like losing 9% of my money annually when I keep it in the bank account. And that's what you're doing by keeping it in cash. I would rather invest my money today at asset prices that are a hell of a lot less than they were in January, with at least the chance of making more money in a year. Or it may decline by another 10, 20% this year, but at least I have a chance of making more money. So I'm actually investing in more quality right now. The only thing that I bought that was more speculative in the last 2 months were NVIDIA and Moneyline. Now, Moneyline, that's purely speculative. And with NVIDIA, it's just so volatile that it's harder for me to consider that a part of my safe portfolio, right? So a lot of what I'm doing with my regular weekly, twice, 3 times weekly purchases is I'm buying ETFs and indexes as well. I'm buying them at the lows right now, and I'll leverage off of them when the market gets higher, right? So this is generally if I wanted to go into debt in terms of margin, you're going to use your ETF and index balance to do that, to buy higher risk stocks in a lot of cases. Now, I choose not to do that with a large portion of my portfolio. Like, you never get I never have generally about more than 1/6 of my portfolio on margin. And right now it's less than that. I reduced margin a couple of weeks ago. And for a number of different reasons, I reduced margin. There was just one particular strategy that I wanted to stop doing. So I reduced my margin. So I'm never more than about a 6. I'm less than that now. But when you decide you want to go heavy into buying stocks on margin, you are doing that based on the overall balance of your account and the equity that you have in it. And it's your safer investments that are going, like your S&P 500 ETFs, your VTIs, your value company, stock mutual funds or whatever. Those are all marginable securities as well, and they can count towards your overall equity calculation if you actually. And I think with some companies you have to mark them on your account as a marginable security, and that'll help you in your calculation. So you're less likely to get a margin call in the future, provided that you have plenty of equity in those accounts. So that's one of my strategies. But anyway, that's not something that I engage in heavily just because I don't like having a lot of debt. So have I ever heard of Cyxtera Technologies? I don't believe I thought I had when I first saw that, but I don't know that I have, Claire. That's something I can take a look into if you'd like. So let me see here. So hey, Jason, GM is pushing down the INSAE battery path and not LiFePO. Just signed an agreement with a tiny penny stock in nickel cobalt sulfate to buy nickel cobalt sulfate. Yeah. So the problem with that is two things: is nickel and cobalt. So cobalt is not exactly rare, but and it's not as rare as people think it is. It just comes out of politically problematic areas, right? You're going to be doing a lot of business in the Congo, and you're going to be doing a lot of business in China. Nickel, on the other hand, has less problem or fewer problems rather in the way of geopolitical concerns, but pricing can be an issue there. So the issue with LiFePO, which is lithium ferrophosphate, is that phosphate deposits are basically located in China, Morocco, which we have really good relationships, and Florida, which the rest of the United States has a marginal relationship with. We have to deal with Florida Man when we're there. Anyway, that little joke about Florida Man, the Florida Man meme. But anyway, phosphate is not rare. There are larger concentrations in those places, but it's not rare. Either iron is not rare and lithium is not rare. I think that in terms of geopolitical strategy, a LiFePO battery system is probably a better way to go to ensure that you have steady supplies. So a nickel cobalt manganese or nickel cobalt sulfate battery system, you may end up facing some supply issues, particularly when it comes to cobalt, particularly because of all of the investments that Chinese companies and the Chinese government is making into the Congo right now, and the fact that it's not politically stable in any dimension, not in any dimension. So one of two things is going to happen in Congo here in the near future. Either they're going to end up with a government that actually gives a crap about their people and ends the exploitation of workers in these cobalt plants, in which case you're going to see a dramatic rise in labor costs, or you are going to see another bloody civil war. They're always in a civil war in Congo. You're going to see another much bloodier civil war in the Congo that is going to result in impact. Yeah. So Anthony, why are people bullish overnight when yesterday they were bearish? They don't know what they are talking about. So Anthony, I'm not trying to assume anything, but you may be older like me, and you think that that Dow Jones moves of 500 points or something spectacular. Like in my mind, when the Dow Jones hit 1,000, it's stuck there, right? So a move of 500 points is basically 5%, and when in reality it's 1.86% based on today's movement. So it's not quite as extreme as what people were thinking about in the past. But I would say that people are neither bullish nor bearish at this point. It's that the market is hitting oversold territory by a couple of different indicators. In fact, there's one indicator, I don't remember what it was called anymore, but it basically has never been oversold since they started it in like 2016. It just hit that point at this point. So no, so it's not a matter of being bullish or bearish overnight. A lot of this is work in the options market, and a lot of this is work in the market and shorting as well. But some of the things that happened on Friday that was noted, or was it Thursday or Friday that was noted, that a lot of people sold puts. I was one of the people that sold puts. So I sold puts, ended up dipping below that price, ended up buying the shares, which helped support the share price of the stock, which is probably for a lot of people going to lead to actual sales of the stock as well. In my case, I'm not gonna sell it until I made money on it. But that's probably one of the cases. We're just bouncing along the bottom right now. It's literally like we're skipping a rock over a pond right now, and all hoping that we reach the other side and don't sink to the bottom. So I wouldn't say that people are bullish or bearish overnight, and that sentiment has actually changed. Sentiment is actually extremely negative right now, Mr. Walker, and that is actually a good thing for investors, especially when sentiment gets its closest to being negative or the highest amount of negativity. That's when I start getting really excited about the market and a big turnaround and an improvement in my fortunes in investing. So, all right. So let me say back to tell 999 So, Edward Gilmartin says small caps are the cheapest. Yes, they are. Also the highest risk. Actually, I'm going to hold on. I'm going to go back here a second. In your view, has the market priced the downturn in? Yeah, I think it actually has priced a normalized recession where we would have, so 2 to 3%, 2% declining GDP for like 3 or 4 quarters in a row. I think that's what they have priced in, that the market has priced in. If the recession is deeper than that, I don't think that has been priced in. And the number that I've been saying since like May or June when they started raising interest rates, I said that by the end of the year, interest rates are going to be at 4.5%, between 4 and 4.5%. It looks like I'm going to be really vindicated on that. Interest rates are going to be up at about 4.5%. That is actually the minimum that the bare minimum that the Fed is going to need to do in order to combat inflation. That's when combating inflation is going to start, is when the interest rates hit about 4.5%. And we start to see a greater degree of inflation. So the market is realizing that recession is part of the plan in order to deal with inflation. There's no way out of this without pain. Hopefully it's not lots of pain. Hopefully it's pain that everyone can share across the economy. Of course, that's never true. It's always people at the bottom of the economy, the consumer class, the people who don't have the ability to save money are the ones that are going to suffer. But yeah, so no, I do think that they priced in a normal downturn in the market, which is somewhere of 9 to 18 months of reduced economic activity, kind of shallowly, meaning like 2% annually, on a pace of a 2% annual GDP reduction. Any more than that, I think we're going to see further pain. And like I said, Edward Gilmartin says small caps are the cheapest. Yes, they are. And tell 666-999. I'm gonna get to your question here in just a moment. I did want to acknowledge a super chat. Douglas B, who's also a member of my Patreon, which means you contribute a lot to me. Thank you very much. Thanks for your time and effort, Jason. Good info the other day about why some jobs will get backfilled when employee reductions hit larger companies. So we're already seeing reductions hit now, right? And we're seeing companies using the threat of a recession or the threat of decreased activity, which hasn't actually happened, right? So in terms of real GDP, GDP before you apply inflation, the economy is still growing. Demand hasn't decreased for most companies or most people, but we're already seeing companies get rid of people at this point. And a lot of that has to do with trimming the fat right now, too. I think that we just go through these periods where we're in such a rush for warm bodies to do anything to help with production that we don't take a chance to weed out the people that really aren't suitable for the position, or there are people that are not suitable for any position. I had a good friend of mine go through something like that recently with a legal case, a long drawn out legal case with someone who is obviously mentally ill, cannot really be productive in society. and really can't hold gainful employment, even though on the surface that person may seem to be almost normal. The reality is they cannot work with people long term to any degree, with any degree of success, because they're too disruptive. And my opinion is this person is probably going to be homeless in a year or so. Just based on what I've heard about the performance of this person at work, the amount of stories they make up, the amount of the persecution sort of delusions that they have, it looks like they're probably going to end up being homeless, and it's going to be everyone else's fault rather than this person's own fault. They didn't get the help that they needed. We're going to see a lot of that, where you see a lot of people that are just not fitting into your team. You didn't have a specific reason to get rid of them before, but now you have an excuse. And that's the thing. I like the idea of how the people in UK call layoffs, and they call them redundancies. A lot of people are going to find out that they are redundant here relatively soon. So let me see here. Final question. If inflation reached target of 2%, what would the ideal, I assume you mean interest rate, be? Near zero interest rates was never sustainable, and people are shocked now. Actually, I think that roughly 4.5% is probably going to be the ideal interest rate. I think that the Fed's intention, if they can manage it, is to keep interest rates lower than I would expect. I've read a couple of more academic papers on this that are saying that interest rates are going to need to be quite a bit higher, in the 7 to 10% range, to really kill inflation. And let's remember the last time they hit 21% in the short term in like 1982. The Fed has more tools, and they're very patient as well. And let's remember these appointments are they're supposed to be not political, but the Fed is a political body to a degree. But they also have the freedom to not really care about what's going on in politics to a degree. I think that the intention here is not just to kill inflation, but it's to unload the balance sheet as well. So I think that keeping interest rates at 4.5% to 5% for a much longer period is probably the goal of the Federal Reserve. And that gives them a chance to create liquidity not create liquidity, but to reduce liquidity in an alternative manner, which is by selling the debt that they have on the balance sheet right now. So the average duration of the debt on the balance sheet right now is only 5 years. And that is something that Janet Yellen said in a press conference a couple of weeks ago. That's actually remarkably short for what I thought that the Fed would have on their balance sheet. No, the average duration of the debt that they have on their balance sheet isn't 5 years. So keeping interest rates 4.5% to 5% in 5 years, with a relatively aggressive plan to sell those securities, or to let balance sheet roll off take its course. If they just let balance sheet roll off take its course, that's taken about $1.2 trillion out of the economy every single year, or off the Fed's balance sheet every year and out of the economy. If they also initiate bond sales in that time period, bond sales in that time period, they're also going to be taking additional money out of the system here. I think it's entirely possible that they could remove $1.8 to $2.2 trillion out of the system annually, reducing liquidity in the global economy, and keep the cost of borrowing at a historical reasonable. It doesn't seem reasonable to us because we've been spoiled now with near zero interest rates for basically close to 2 decades. I mean, since 2000, we had a brief interlude where interest rates were almost as high as they are today. And beyond that, it's been near zero for the last 14 years. And people have just forgotten what actually paying to borrow money is like. And I think that at some point that has to come to an end. And I think we're in that era right now. And I think that the Federal Reserve is not going to let this crisis go to waste, that they are looking to bring asset prices down quickly, but they're probably looking to keep inflation or interest rates normalized in order to do something about the giant $9 trillion elephant in the room, and that's their balance sheet. I just don't see a justification for them keeping $9 trillion on their balance sheet. That is just too much government involvement in the economy, even though ostensibly the Federal Reserve is not the government. So, and that's a whole different thing. So, Claire says, what about investing in something like Google? I hear it's undervalued, relatively safe, or one of these software companies like Salesforce. Those are great ideas, Claire, and those are fantastic ideas. So if you listen to the 100th podcast of was it the All In podcast, and we had sort of an unofficial meetup at my bar on Saturday. For my bar is called Good Bar. It's located at 1872 Rosecrans in San Diego, and it's an entertainment and sports bar. We do a lot of like entertainment activities there. Like we have comedy nights, and we have like really good comedy night and a really weird open mic night afterwards. I highly suggest you stay for the open mic night. But we had an unofficial get together for the 100 for celebrating the 100th episode of the All In podcast. Now, I didn't even know what the All In podcast was until 3 months ago. I knew who Chamath Palihapitiya was, but I didn't know who some of these other guys were. And there was about 35, 40 people that showed up to that. And I listened to it ahead of time. I had planned on going to that meetup, but I ended up going to my daughter's volleyball tournament instead. But one of the sort of transitions that you want to look at here is that a lot of these companies like Google that have been traditionally massively overvalued, that we were looking at, man, I'd really like to own shares, but it's so overvalued. That's gone from being a growth company to what's called a GARP company now, which is a point that these guys made on the All In podcast. I was listening, so I don't know which guy said it. Basically GARP stands for growth at a reasonable price, right? And this is when you start to see the stock really take off. So I think that Amazon, Google are almost there, meaning that we're probably going to see a really long and sustained run on the growth of their company stock, and it's going to be based on current numbers rather than the pie in the sky valuations. And Amazon is really the one that's almost there. And then Apple's actually already there, and Apple hit that about the time when Tim Cook took over. And the stock has done really well since Tim Cook has come over. Like, rather than being this explosive growth stock that everyone just talks about, the pie in the sky values, the valuations that might happen one day, that is the share price really took off after they reached this growth at a reasonable price phase. So yeah, let me see here. Let's see. It would be great if you'd look future at CYXT. Thank you. You meant Twilio. Okay. Yeah. Oh, you're talking about here. Talking about companies like Salesforce or FTY or Twilio. Man, I've used Salesforce, and the problem with Salesforce, and this is the problem with all of those enterprise software like that, is you use it in your profession for a specific application, meaning for a specific purpose, and you don't see what its overall value is for the fact that it can basically just do anything that manages a Salesforce. So I actually had a lot of frustrations with Salesforce. There were a lot of things that when I worked for various investment companies that I didn't think it did very well. The problem is it did just well enough for all of those companies to work with them. Okay. And I've worked with a couple of other of those resource or enterprise resource management projects, like I think what it was called Redtail, and HubSpot, and a couple of others, and none of them are better. They never do exactly what it is that I want them to do, and they're never as spectacular as I think they're going to be, but they're all just good enough. And they have but this is the way that any company that has to deal with sales and has to do with leads and wants a way to track those and allow your employees to monetize. I want to pay my most productive employees. Like at every job that I offer at my companies, everyone's on commission to a degree. They may get a base salary, but they have the opportunity to earn more based on the effort that they put in. And I want everyone to have that motivation. To me, just getting $50,000 a year to sell widgets doesn't necessarily mean that guy's going to sell more widgets. But if you pay him $50,000 a year and a commission on top of that, he's going to sell more widgets, and and he's going to be a better salesperson for it. So, or instead of paying $50,000, I might pay him $40,000 and give him a better commission structure. That's probably what I do. But yeah, but no, every company that does that is eventually going to go in the direction of one of those software packages like that. And software packages, man, they just have one of the best abilities to scale money-wise, to print money essentially, compared to anything else, even compared to anything where you're actually making an object. Software has the ability to scale like nothing else does. And oftentimes you don't have to pick a winner. You have to pick the group of winners, or you have to pick, like right now, just like there is an Android Apple religious war. It is religion. There's very little difference between the products. And I know somebody's going to get upset for me saying that. And Android, at least your top of the line Android products, have clearly been superior to Apple's products for a decade or more. But that doesn't really matter because most people's exposure to Android isn't to the top of the line products, it's to something 2 or 3 generations behind, right? And now, like I hear this all the time with some of the younger people that I work with. If you get green text, which means you have an Android, that must mean that you're poor. Or I actually heard someone say that in a business meeting. Oh, do you have an Android? No. What do you think? I'm poor. And this just means that it has separated based on quasi-religious lines, right? That you're an Apple person or you're an Android person. I happen to be an Android person now, and it's become just as religious for me. Every single person in my immediate family that has a phone has an iPhone except for me. And I'll be damned if I switch to an Apple. It won't prevent me from buying Apple stock. Okay. It won't prevent me from buying any other Apple products that should come out. But I just recognize it for what it is. It's a conviction now at this point that doesn't have anything to do with rationale. So the thing is, you're probably going to get that in a lot of software, and particularly with this enterprise resource management software like Salesforce, HubSpot, and I would look into any of those. And like I said, they're all going to do well because the entire market is moving in this direction. And I know that I will, if I ever started my own investment firm, I would not use Salesforce. I might use HubSpot, but I would definitely not use Salesforce. I don't like its marketing integrations with marketing pieces that you do online if you're like 100% online business. HubSpot's a little bit better. Particularly when it comes to like email communications and that sort of thing. But that's my particular choice. I just wouldn't use Salesforce again. I've used it with 2 or 3 different companies now, and I just wouldn't do it again. Now, but it doesn't matter that millions of other people won't use HubSpot or millions of other people won't use Redtail. So let me see here. What does a sudden drop in consumer confidence mean for stocks? So I didn't see are those numbers that came out recently that I missed or something. I didn't see that there was a sudden drop in consumer confidence. That's something I'd have to take a look at. That's actually a bad sign for demand in the economy, but it doesn't surprise me. We have high inflation. Consumer confidence is taking a beating all over the world. Like our economy doesn't run on it doesn't run on butter alone. You know, we have this saying, actually, I think it's actually a British saying, guns and butter. The economy runs on guns and butter. But it's really guns and butter and video games in the United States, meaning we got the guns problem covered right now, meaning that we sell lots of industrial equipment, particularly related to the military industrial complex. And right now they've gotten a huge shot in the arm due to the Ukraine conflict. We got that covered. The butter part is where we have a problem with. Food prices up really high here. And I think that's affecting things like the video games element, where people are cutting back on luxuries right now because they're spending more money on meat and bread and cheese and milk and things like that. And that's kind of an issue for a lot of people out there. So it's not surprising that we see a drop in consumer confidence. But this was anticipated. If we've had eight different 8 or 9 consumer consumer CPI readings that were above 8%. I think that's expected at this point. And to me, I priced that into my calculations here. So let me see here. Grace says, thanks for in-depth and reliable analysis. What's your current outlook on BYD? I sold it when it popped and got up back recently. So I think there is absolutely nothing wrong with BYD. My only concern with them is their ability to secure lithium supplies for their battery business. But in terms of their auto business, it's doing really well. They don't have the issue of unlimited demand because the designs of their cars are probably not as special as an Xpeng or a Neo. They're certainly not bad. And it's not a Porsche, right? These aren't Porsches or something, but they're great cars for the money that you're paying for them. And they're able to sell their entire inventory that they're producing. And they're leaving behind completely the whole gasoline powered world. Not completely. They're going to what's called their new energy vehicles, which is hybrids, plug-in hybrids, and battery electric vehicles. That's all they're going to produce. They're not going to have any purely fossil fuel vehicles anymore, other than some of like their heavy trucks and all that. But the recent price action on BYD should be looked at as an opportunity if you're comfortable with the geopolitical risk. Now, as much as I talk about BYD, I don't own that much. I own 300 shares of it at this point, and I've never owned more than a couple hundred shares, even though I love the company. And part of that is I value it differently because of how established it is than I would a Tesla. Even though numbers look similar for them now, I still value it differently because of how much I expect them to grow and how much of their domestic market I think they can they can take over, and how much appeal that their cars are going to have outside of their domestic market. They may not have as much appeal as some of these other cars do. Their battery business is where I think they could do exceptionally well. They're already the 4th or 5th largest battery producer on the planet. And as long as they're able to secure the supplies they need to produce those batteries, that's only going to get better and better and better. Folks are really excited about their cars. I'm really excited about the Blade battery. It's cheap. It's safe. It doesn't have any materials that can't be found in most places. And it's very simple, and they designed it to be sold to other car companies to use. And it's probably the best in class lithium ferrophosphate battery. As far as I know, it is the best in class lithium ferrophosphate battery that is out there, particularly when it comes to its safety. And I think they're going to do very, very well. But they are reaching a point right now where I haven't checked the price in a couple of days, so I don't really want to say, let's see. I haven't checked the price on that in a couple of days. I'm going to do that right now. But I want to say so the price to earnings ratio is still 96, 97. So they're still overvalued in this case. And they do pay a small dividend, but one that's small enough that I actually just kind of disregard that. And if we're looking at the pop that they had recently, let's look at the last 6 months or so. So yeah, they've gotten really beaten up in the last 6 months or so. On the surface, it might look like they are good value. In terms of an auto manufacturer, there's not really a reason for them to have Tesla-like valuation at this point, because they haven't expanded their production like Tesla has. Meaning they haven't grown it from 0 to 1.7 million. They're still producing the same amount of vehicles. They've just switched around what it is that they're producing. I think that the max that they ever produced was like 1.4 million vehicles total in their highest year. And that would have been like 2014. So I think that BYD's real victory here is going to come in battery production. I think they're going to be a big auto producer in the future. But do I think they're going to hit 20 million vehicles a year like Tesla might one day? I don't think Tesla will. If Tesla hits 12 million vehicles a year, that's the point I'd probably sell all my Tesla stock. No matter what else they're doing. If they sell 12 million vehicles a year and they do have autonomous taxis, they sell 12 million vehicles a year and they don't have autonomous taxi business and they don't have fancy talking creepy robots, all that stuff, I'm probably still going to sell if they hit 12 million vehicles a year, just because I don't think in terms of market share, they'll be able to grab more of that. So, yeah. Chris Palmer and Grace, thank you for the super chat. So the super chats really go in runs. Like sometimes I don't go get any of these for like weeks at a time. And then some days like today, I get 3 of them. So thank you very much. The consistency of the live streams, I'm trying to do it every Monday and every Thursday. Monday will be at 1:30. Thursday will be at 1. I did 1:30 just because a couple of people had asked me to do it a little bit later because they weren't able to watch it. But honestly, guys, when you got kids doing high school sports and like other sports, all I do is drive now. Like I barely have any time to work. I'm really glad that I'm self-employed now. And if you are a single mom, or a single dad that drove all of your kids to all of their high school sports and, club sports and little leagues and all this, I commend you for it, because all I do is drive and I'm tired all the time. So it's, I spent like 10 hours at a volleyball tournament, my daughter's volleyball tournament on Saturday. And then on Sunday, she said, let's go to the beach. I want to do beach volleyball. And I played beach volleyball for like 2 hours too with her teammates. I couldn't believe it. I couldn't believe it. So, but I'm exhausted after all that. So, thank you very much for recognizing that I'm being consistent with the live streams. That's what I really want to do. It's
putting out the videos because it's actually more time consuming than me doing the research that I'm going to do anyway on the economy and on stocks and just talking about it live. It takes me a lot more time to do the actual videos. So I want to thank everyone for showing up today. I'm going to answer everyone's questions today. I'm not going to stay on much past an hour though. Doug B says, I have a Samsung smartphone tapping against my Samsung TV, and I can stream anything from my phone to the TV. It works great if I can't find an NFL game on TV. That's cool. I didn't even know they had that feature. That's actually pretty amazing. So I have one of Google's phones, and one of the only reasons I have it is because of its security. Like I've got a number of different programs on there that some of the people that I work with like demand that I have on. Like I have an automatic like erasure and backup system for my phone, and and there are a few things on there that don't get backed up whenever my phone gets all my private information gets erased. But somebody attempted to access my phone a couple of months ago, and then it erased all of my data and then backed it up on the cloud. But my cameras for my Academy, that login information didn't come back. And so that's one of the things I had to do. And that was kind of a pain. So hopefully that's going to be a little bit more perfect in the future. Here we go. Chills Joe, bringing up Joby again. Joby says it's going to have 963 planes operating by 2026 and $2 billion in revenue. Bleecker Street Capital says this is rubbish. What do you think? That's rubbish. They're not going to be able to produce 963 planes, have them operating, and have $2 billion in revenue by 2026. It's forward-looking statements are always rubbish, though. Okay, and we should be surprised when companies accomplish what they say in their forward-looking statements, and not at all disappointed when they don't say they're going to do it. But 963 planes in the next 4 years, when as far as I know, they don't even have a factory that could possibly produce 963 planes. So not only that, they have to build a factory that can produce 963 planes. And I don't know to what degree how more or less difficult producing those planes is going to be on a technical basis, but getting those planes approved by the FAA is probably going to take up more than 4 years. I mean, I think they're more than 4 years away from real revenues. And but this is a company that I've only looked into because of you. I've only looked into it a couple of times. I haven't really done the sort of in-depth research on the total market there. And I did have a real bias against it until everything started happening with the war in Ukraine. And it's not passenger vehicles, us having vertical takeoff and landing passenger vehicles that I see in the future. It's drone technologies and delivery that I really see in the future, particularly with the success of the loitering munitions activities in Ukraine, where you have people just listen to the radio sitting on tanks that can't hear a drone that's dropping armor-piercing grenades on top of them, or even firing munitions. You can't hear that. So I think that is I think that market deserves a little bit more attention than I was willing to give it in the past. I'm going to take a look at it. So should Tesla spin off its energy business to unlock more value for shareholders? It seems like it is a great business. It's already accounting for something like $3 or $4 billion a year in revenue. And that's really going to grow this year. They have announced a couple of really, really big projects that are in the works. That doesn't seem to be Tesla's aim. In fact, we may actually see the opposite of that. When Tesla started talking about the X app and that Twitter is going to be rolled up into the X app, that makes me think that that he's really taking that David Lee's idea of having SpaceX, Tesla, Boring Company, everything under the X, a holding company under X, and us, and we would be allowed to own shares of that. I don't think that's a good idea, but it's a good idea for Tesla and for Elon Musk. I don't think it's a great idea for investors, and that's why it may happen. So that's one of the things that I'm worried about. Let me see here. And Tesla just announced a 700 megawatt project 30 minutes away from you. It would be the biggest in the Southern Hemisphere. Yeah, they're doing actually a lot of projects in Southern California. A lot of them in the Rio Grande Valley in Texas is a really big one. I can't figure out why they chose that area other than its proximity to some SpaceX facilities. I don't understand what, and it would be easily monitored by people there. That doesn't seem like the most likely location. What you're in for just a couple of different reasons there. Well, now I think about me, it is Texas utility grid isn't all that reliable, or as we've seen, it's not all that reliable in wintertime. So maybe that's one of the things they're doing, but that's not an area actually that suffers from freezes either. So yeah, I want to get here to Michael Will. Were you following the Trevor Milton Nikola trial and any observations on his conviction? I can't say that I was surprised. So I'm not surprised that he was convicted. And I don't. Trevor Milton is not a supervillain. He's a hapless boob. Like, he never looked like he knew that what he was talking about when it came to technical knowledge. There's a lot of CEOs of companies out there that aren't engineers that can speak with a degree of authority on the vision that they're trying to sell you. Right. I don't believe for a moment that even Steve Jobs understood everything about the technology that he was hawking with his company. The man was a visionary who ran a company, and maybe he had an engineering background, but he wasn't in the nuts and bolts of the engineering. The same can't be said of somebody like Elon Musk, who actually designed all of the first rockets for SpaceX. And what was his excuse? He says, well, we can't afford to hire the best engineers. They don't want to come work for us because we can't afford to hire them. So instead of hiring less than the best engineers, I'm just going to do it myself. And that's probably why the first 3 rockets blew up. But I can guarantee you, if I did it, it's not just the first 3 rockets that are blowing up, but it's the first 100 that were blowing up, right? But the other thing is, you have very few people, CEOs, that are capable of that sort of technical involvement in the actual product or service that they're doing. Trevor Milton, we should never have expected him to be that, but he just misrepresented or lied about so much. And unless he gets prison time, I don't care what the fine is, unless he gets prison time, he basically got away with it. I think that just based on what I know that he took out, that he's already walked away with close to $100 million, right? He's already walked away with close to $100 million that came away from Nikola. He already bought like a $30 million ranch. And even that was a fraud. He misrepresented the value of Nikola and got the ranch owner to take stock options for it, which are now worthless. And like, you can do that. There's nothing wrong with that, but you can't misrepresent what the company is worth or what it's going to be worth. And that looks like that's what he did. I don't know. That may have been the charge that he was actually acquitted on. I don't know, but I guarantee you he did that too. I don't care if he's acquitted or not. He's alleged. Yeah. I can't finish that because I don't want to get sued. And he has a reputation for suing people. Not that the suit would go anywhere, because now you're a convicted criminal, Mr. Milton. You just haven't been sentenced yet, but he's got to get jail time. But he's not going to get real jail time. He's not going to get like big boy jail time. He's going to get a few months behind bars, maybe a year behind bars in a federal country club, somewhere that basically has like, a prison band and a game room. But he's not going to get that. And if the fines aren't equal or more than what he took out of the company, he got away with it. And that's the thing, is I think he's really getting away with it no matter what. We just don't have the system is not designed to punish people who are that good of thieves, which we're going to find out, which we all known for a long time. The system is designed to favor the wealthy and to punish the poor. In this case, Trevor Milton is wealthy enough that the system can't really catch him unless something gets wrong. He is from the wrong class of people. I can tell you that much. Meaning, he's not from a class of people that really enjoys tremendous political protection. He would have had to have bought that himself. And I'm not sure he made the necessary investments in politics to buy enough influence to keep him from really suffering the consequences. But anyway, we're all finding that out now with the various trials and that are going on with political folks now. Likely most of these people are never really truly going to get punished for the truly heinous things that they've done. But we have to move on. So speaking of that, I got to move on today too, guys. I need to do some other things today. which includes making some banana squash bread, which is, I just got to do that today because I have some half rotten bananas. So I need to put those in bread so I don't waste them. And I also got to go pick up my son from school, and we're going to go work out and watch one of my daughter's volleyball games today. So thank you very much for attending. Thank you very much, all you guys, for the super chats. It's been a long time since I really received more than one of those in a live stream. And I will be back on Thursday at the latest, probably this week. That's the only activity I'm going to have on the channel, is just on Thursday. And some things have shaken out. I may have a little bit more free time, so I'll be doing some other things with the channel here pretty soon. And I don't plug my Patreon enough on this channel. If you guys aren't a member of my Patreon and you'd like to support the channel, please join. I don't have a ton of members there, but everyone there is like brilliantly intelligent, shares great insights, and a lot of knowledge that you are not seeing in other media, particularly about the EV industry. And it's a nice group of people as well, who can, you're free to have ideas there and discussions and disagreements. And the idea is not consensus. I want people to disagree respectfully in the Discord chat. All right. Thank you very much, folks. And I will see you next time.